Hey everybody, I'm Aaron Norris. It's November 8th, it's Friday, and this is the Norris Group's Real Estate Headline Roundup in 2. The U.S. homeownership rate increased to 65.3% in the third quarter and is now off its 18-year low, so it's up just a little bit. First-time home buyers made up less of the market at 38% off the long-running average of 40%, so that mix is changing up a little bit. Home prices for single-family homes increased in the third quarter in almost 90% of cities in the U.S. Mortgage rates increased this week for the first time in 3 weeks after the end of the government shutdown. Rates for both mortgage delinquencies and foreclosures continue to decline and now stands at 6.41% and 0.61% respectively. And finally, builder confidence in the 55-plus market continues to improve. In fact, the National Association of Home Builders Home Builder Index on all segments of the market increased by 14 to 50, and that's the highest it's been since the beginning of the index back in 2008. LPS recently reviewed adjustable mortgages and reports that no likely changes in delinquencies will occur once these ARMs reset. 63% of ARM loans have already been reset, and the remaining 37% are due to reset will likely not cause any issues because they were originated after the crash already happened, so they were under tighter lender guidelines and higher credit scores. Several large banks are being sued by Fannie Mae for LIBOR rigging. Fannie Mae alleges that banks manipulated mortgage rates, credit cards, and other financial tools, estimating around an $800 million loss for Fannie Mae. Banks being sued include Bank of America, JP Morgan Chase, Citigroup, UBS, Barclays, Deutsche Bank, Royal Bank of Scotland, and Credit Suisse, and Rabobank. So I'm sure it's not the last time we're going to be hearing of this issue. Fannie Mae and Freddie Mac will be paying $39 billion back to the U.S. Treasury. Despite paying money back, it still appears, however, that lawmakers are intent on winding down Fannie and Freddie, seeing they've both been in conservatorship since 2008 and were bailed out at a cost of $187 billion. Freddie Mac made a profit of $30.5 billion in the third quarter, $30.4 billion of which will go back to the government, and Fannie Mae made $8.7 billion. That's it for the headlines today, but there are, of course, many more headlines on our website, thenorrisgroup.com/blog. Up on the radio show this week, we continue with I Survived Real Estate. This is going to be the third installment. It'll carry on for the next couple of weeks. Some really interesting conversation that you're not going to want to miss. You can check that out on iTunes. You can go to the website and even read the transcriptions, or you could even watch the video of the entire event at isurvivedrealestate.com. We do have some upcoming events, but really not until December. One I'm most excited about, actually, did you know November is Philanthropy Month? We are participating in something called Give Big Riverside. 112 local nonprofits are competing for cash prizes up to $5,000 for the most unique donors. We're one of the lead sponsors, and we like, if you're in the Riverside, San Bernardino area, Inland Empire, to come out and support. Even $10 can put your favorite nonprofit in line for some fairly big cash prizes, which can do a lot within their organization. Check out all the participating nonprofits at givebigriverside.org. And next Tuesday, 11, 12, 13, show up and give as little or as much as you'd like. For more information on hard money loans, check out thenorrisgroup.com, or if you're looking for something a little bit more passive, earning 9, 11, or 12%, check out tngtrustdeeds.com. With that, have a fantastic Friday. Happy Veterans Day on Monday, and we will see you next week.